Something quiet happened inside Shiba Inu's price action 6 days ago, and most of the market completely overlooked it. A structural shift in the downtrend has been confirmed by multiple analysts. The bears have held this token hostage for months, but the pattern that just formed may have just changed everything. This content is provided for informational purposes only and should not be considered financial advice. Market conditions can change over time. To fully grasp what is unfolding with Shiba Inu right now, you need to go back to December 2024. That is when the token reached a peak of 3,343 units. What followed was one of the most brutal and prolonged corrections the Shiba Inu community has endured in recent memory. According to reports, the token surrendered 81.4% of that peak value before hitting a floor in early February 2026. That floor came in at approximately 507 units, a number that now represents Shiba Inu's most recent multi-year low. During those months of decline, the price followed a textbook bearish pattern. Every recovery attempt ended with a lower high. Every pullback produced a lower low. The sequence repeated itself without interruption, confirming that sellers were firmly in control throughout the final stretch of 2025 and into the opening weeks of 2026. The broader market environment offered little relief. Altcoins across the board struggled to build momentum as macroeconomic concerns weighed on investor appetite. Shiba Inu was not alone in its pain, but the depth of its correction stood out. Traders who entered positions during the 2024 peak had watched value erode steadily month after month. By the time February 6th arrived and the price touched 507 units, the question on every holder's mind was simple. Had the selling finally run out of fuel? As of February 20th, that question is beginning to get a very interesting answer. Here is the development that has the technical community paying close attention as of this week. According to analysts, a market structure break was identified on the 4-hour time frame. After posting a local low of 507 units on February 6th, Shiba Inu rebounded to a lower high of 648 units on February 7th. Under the established bearish pattern, the next expected move would have been another lower low. That did not happen. Instead, on February 14th, the price pushed upward and cleared 648 units, surging to 725 units before consolidating. That move above the previous lower high broke the chain of descending structure that had been in place for months. Simultaneously and independently, a second and potentially more significant formation was flagged by technical observers. Sources confirmed that an inverse head and shoulders pattern is now in its late stages of development. The left shoulder printed at approximately 616 units. The head formed at the 507 unit cycle low on February 6th, and the right shoulder developed near 614 units. This is a classic reversal setup. The inverse version of a head and shoulders formation carries a specific implication. It suggests that the force driving prices lower has reached a point of exhaustion and that buyers are gradually assuming control of the overall structure. The numbers behind this technical setup deserve careful examination. For the inverse head and shoulders pattern to carry any real weight, Shiba Inu must close decisively above its neckline resistance. As per analyst data, that neckline sits in the range of 700 to 720 units. A confirmed weekly close above 720 units with accompanying volume would validate the formation and open the door to measure move targets of 780 units, 850 units, and ultimately 900 units. The market structure break adds another layer. According to reports, 4 specific upside targets were mapped out following a successful retest of the breakout zone. Those levels sit at 790, 810, 830, and 850 units respectively, representing potential rallies of 27%, 30%, 33.6%, and 36.8% from the price levels at which the analysis was conducted. On-chain data provides supporting context. Community trackers show exchange reserves dropped from approximately 82 trillion to 81.47 trillion tokens over recent weeks. Holders continue moving assets off centralized platforms, reducing immediately available supply for selling. Meanwhile, as per technical analysis sources, the 14-period RSI sits at 47.46, placing Shiba Inu firmly in neutral territory, which means the asset is neither stretched to the upside nor dangerously oversold heading into this retest phase. That neutral reading preserves the possibility of movement in either direction without the drag of extreme momentum conditions. Market analysts studying Shiba Inu's current position are drawing a clear distinction between the mechanical signals and the conditions required to sustain any breakout attempt. The technical case for a reversal is genuinely building. Two independent formations, the market structure break and the inverse head and shoulders, converging at the same price zone in the same time frame, adds meaningful credibility to the overall setup. However, analysts note that the retest phase is where the story becomes critical. Sources confirm that Shiba Inu is now consolidating around the breakout zone it cleared on February 14th. This retest behavior is entirely normal. From a structural standpoint, what makes it meaningful is the outcome. A clean hold above 648 units with the price reclaiming 660 to 662 units as support would confirm that the structure shift is real and not a false break. A failure to defend that zone and a close back beneath it would instead represent a rejection, effectively converting the breakout into nothing more than an oversized lower high within the existing downtrend. Analysts note that whale activity has turned notably cautious since the February 14th surge higher. Large holders appear to be observing rather than actively participating, and the absence of a meaningful demand surge from this group is precisely what is capping the current recovery attempt. According to sources, volume confirmation from large market participants may be the single deciding factor in whether this setup resolves to the upside or collapses back into its prior bearish range. Looking at the next 2 to 4 weeks, Shiba Inu stands at a fork in the road that will be defined almost entirely by price behavior at a single key zone. The current position of approximately 623 units places the token right inside the territory where the breakout level and the right shoulder of the inverse head and shoulders pattern overlap. This is the decision zone and the market knows it. The bullish case is straightforward. If Shiba Inu successfully defends 620 to 640 units on the current retest and then reclaims 700 units with volume confirmation, the inverse head and shoulder structure would trigger a measured move towards 780 and subsequently 850 units. That 850 unit target aligns across multiple independent analyst projections, reinforcing its significance as a key destination in any genuine recovery scenario. The bearish case is equally defined. Analysts note that a drop below 600 units and especially a confirmed close beneath 580 units would invalidate the head and shoulder structure entirely. In that scenario, the market structure break would also fall apart, and Shiba Inu would resume its descending sequence with the next potential floor somewhere near the 507 unit cycle low or potentially below it. The next 10 days may deliver the clearest directional signal this token has produced in months. So here's the question for the community. Do you believe this retest holds and Shiba Inu confirms a genuine trend reversal, or is another lower high quietly forming right now? Drop your read in the comments below. That is a complete breakdown on Shiba Inu's market structure development as of February 20th, 2026. If this kind of deep technical analysis is useful to you, subscribe and hit the notification bell so you catch every update. The comment section is open and we read everything posted there.